But let's get in Vaibhav Agrawal, VP Banking at Angel Broking, to talk a little bit about what happened in the policy and how the banking sector is likely to pan out. Vaibhav, I just want to understand from you, what exactly is the outlook on banks on the back of, the commentary from the RBI governor saying that further easing is only possible if the economy is kept on the path of disinflation, and the fact that rates were kept on hold this time around?
Well, I think the policy was in line with expectations because of the seasonal increase in inflation. We do believe that the overall, inflationary outlook, from a more medium-term point of view has not worsened. Even keeping in mind global commodity prices expected to remain benign and so on. Even the government support would play a key role, whether, how much inflation is caused by the government or not. But, broadly, even looking at the fact that credit growth remains on the lower side and financial savings continue to increase at a faster pace, I think the overall direction for interest rates in the economy does remain downwards as far as we are concerned. And specifically from this policy, I think it would be, we would not really take any negatives for the sector.
Okay, and what is it that you make of the outlook for the PSU banks going forward? Do you think that we can see some sort of easing when it comes to the asset quality concerns, that perhaps in FY17 we will be on the cusp of seeing improved earnings as well as provisions on the healthier side?
Well, in the second quarter earnings as well, and for maybe 2-3 quarters now, for at least some of the larger PSU banks like State Bank of India, we have seen a degree of plateauing out in the fresh creation of NPAs, etc. So at least the problem does not seem to be getting worse. But in absolute terms, it's not that the problem is over. And as the governor also pointed out, possibly the pain or the cleanup, so-called cleanup, would sort of continue right through FY17. So I think there are still 2-3 quarters more at least to go before one can really say that asset quality problems would be over. After all, several of these sectors like metals, especially have gotten a little worse rather than better in the last quarter or two.
Vaibhav, so tell us, what is it that you're liking within the banking stocks right now? Is there, what would be your top 3 buys right now, if there are buys at all?
Well, like I mentioned, from the policy, at least as far as the broader economic outlook or the interest rate outlook, we still do not see any negatives on that front. And so we do see from a 2 to 3 year perspective, growth reviving as well. And I think the private banks remain the best place to take advantage from this. Their ability to absorb whatever asset quality pains are there is also clearly much higher. And even when it comes to a thing like base rates on marginal basis, etc., whatever uncertainty is there, it would impact again PSU banks more rather than private sector banks. So overall, our call remains consistent, and we continue to prefer private banks. Whether it be an Axis Bank or an HDFC Bank or an ICICI Bank, I think all 3 of these major private banks are a buy for us.
Right, Vaibhav, good chatting with you. Thank you so much for taking the time out and, really analyzing what post-policy, how one should approach the banking sector. That's the view then from Vaibhav Agrawal from Angel Broking. But take a look at what the rest of the market is up to. And we're just very, very tempered. 79.50, so just a very sideways session is what you're seeing right now. The broader markets, though, have picked up from the lows, so small caps are back in the green now. And mid-caps as well are going good by about 7/10 or so.
Yes, indeed. There are some active pockets like the fertilizer space, which is doing fairly well. Metals as the space is shining. You have lots of stocks from the auto sector as well, which are in focus on account of the auto sales numbers. The advanced decline ratio still remains in favor of the gaining side. But on that note, we'll call it a day right here on Riding the Bull. Thanks so much for tuning in. Stay tuned for closing trades. That's up next.